Hello traders and welcome back to the Forex Geek where we dive deep into the tools that can help you make smarter trading decisions. In today's video, we are going to be talking about the momentum trend trading strategy, a powerful approach that combines trend analysis with momentum indicators to identify high probability trading opportunities. This strategy helps you enter trades with both market direction and strength on your side, significantly improving your chances of success. By the end of this video, you understand exactly how to identify strong trends, measure momentum with those trends, and execute trades with precise entry and exit points. Stay with me until the end as I share a complete step-by-step framework that you can implement in your trading immediately. Without wasting any much of your time, let's get started. So first of all, what is momentum trend trading, which we are talking about? Momentum trend trading is a strategy that combines the principles of trend following with the power of momentum indicators. The approach helps traders identify and ride strong directional price movements within established trends. By focusing on both the direction and strength of market movements, traders can make more informed trading decisions about when to enter and exit trends. At its core, trading involves identifying a clear trend and then confirming the strength of that trend using momentum indicators. This ensures that trades are placed in the direction of the market's momentum, increasing the likelihood of successful trades. So, talking about these momentum indicators, the first one we'll be using is the RSI. I'd like to put that on our charts, and also we will be using the moving average to tell our trends. We're using the 50 period moving average for our trends. All right. Now let's talk about the step by step of this strategy. The very first step is identifying the prevailing trend. Are we in an uptrend, or are we in a downtrend, or are we ranging? This is crucial because you want to trade in direction of the trend, not against it. So we use the 50 period moving averages, and you can also add the 200 period moving averages on the daily chart to establish whether the market is in an uptrend or downtrend. So we're looking at a golden cross. Let me use the 200 period EMA for a golden cross. Okay. Now looking at this, we're going to be using the 200 day moving average, and now we have the golden cross happening here for a buy signal. Now this house tells us that we are in an uptrend, have the golden cross happening here also for a sell signal. You can see this is the golden cross. This is another golden cross here for a buy signal. So the golden cross helps tells us whether we are in a bullish or bearish trend. Now we've seen our golden cross, it means we are in a bullish trend, and the next step is to confirm momentum with trend within the trend. Now we're looking at momentum. How can we know when we should buy and when we should sell? Now RSI typically works in such a way that readings below 30 signals oversold and we should be looking to buy, and readings above 70 signals overbought and we should be looking to sell. So that's just the RSI for you. Also, readings above 50 signals strong uptrends. Readings above 50 like this, when the RSI is moving above 50, is signaling that the trend, the prevailing trend, is a strong one and we should stick to it. And that is for the RSI. This is how we can tell the momentum using the RSI. Now after this cross, after we had the golden cross, we had also the RSI confirming our trend with momentum. Now within this trend we just started, you can see the RSI crossing above the 50 level. Also the RSI being very close to the oversold levels, showing that we should be looking to buy, especially from areas like this. Now the entry strategy is to wait for a pullback or a breakout that aligns with the trend and momentum. Now for our entry strategy, we're just looking for price to break above this level here, which happened around this area. So we're looking to take our buy entry as price broke out of that area stop loss below the swing low, and take profits all the way up 1:2 or 1:3, or we could just trail our stop loss and hold this trade as long as the trend is still active. We can trail our stop loss using our moving averages, or when our moving averages gives us a sign that we should be selling, and that will be when we get our dead cross. The dead cross is when the 50 period moving average crosses below the 200 period moving average. So let's look for our sell example. How can we enter a sell example here? And we have the RSI giving us overbought conditions already from about some days ago, before we had our dead cross here, signaling selling momentum in the market. We should be looking for selling opportunities. At the time where we have our dead cross, we have um price being price being oversold, so we can't necessarily enter a trade at this point in time. So we wait for a pullback. Remember, our entry strategy is to wait for a pullback, and after we have our pullback, we can then enter our trade. And you should also confirm the RSI falling from above 50 to below 50. We also have that here. So we're just looking to take our sell trade as price broke through this level. See that breakout is a very good confirmation, helps us to track our trades so that we don't make mistakes. Breakout confirms the momentum. Also, if you to add the volume indicator here, you would see that that point in price has significant volume, selling volume in the market. And wait for the volume, and you can see this is the point in price I'm talking about. This is the volume of this sell, this breakout happening here, this break to the downside. So it's very important you also confirm the volume, the strength, the momentum within a trend, as this is what our strategy is based on. Momentum within a trend, the momentum trend trading strategy. So it's very important. I would advise you go and study, practice the strategy. It's very, very easy. We have another example happening right here. But at the set time where we have our golden cross, the RSI has already been oversold some days back, but also we have the pullback happening here within this uptrend, and we're expecting price to continue from this area. At the same time, we also have the RSI being below the 50 level and also being very close to the 30. We also have divergence. If you're familiar with the RSI, you know there's something we call divergence, where price is moving in contrast to the RSI. We're having higher highs and higher lows on the RSI, but price is giving us lower highs and lower lows. And that just signals that there is a reversal coming soon on price, as price is supposed to be reflecting whatever the RSI is doing. And you can see, as we have our cross above the 50 level, we also have our breakout after our pullback, signaling opportunity to buy. Now looking at this, our buy trade starts here, stop loss below the swing low, and take profits all the way up. Had a 1:1.6 as the highest point before we had our dead cross, signaling the start of a sell trend. This was just a short trend, a short bullish trend that happened here, and we were able to take part, and we were able to join in for this short bullish trend. Risk management is essential for long-term success, so I advise you set stop loss below the previous local low for long trends and above the previous local high for short trades. Risk no more than 1 to 2% of your trading capital per trade, and use a minimum of 1:2 risk to reward ratio. This ensures that your potential gains are at least twice your potential losses. So right traders, you've come to the end of this video. Engage with us in the comments below. We want to hear about your experiences. If you found this video helpful, don't forget to like, subscribe, and turn on the notification bell so you never miss out on more trading tips and strategies. Thanks for watching, and I'll see you in the next video.